we're going to go into our next panel. So I guess we have our chairs ready. And it's a very interesting story because speaking of working with people very early on, and some of you know me already, but I'm one of the co-founders of Tetuan Valley, and we started doing this more than 10 years ago. And one of our first students is actually the person that's going to be sitting there. And it's kind of fascinating to see the journey from beginning as an entrepreneur, developing a series of companies. DN Capital!
Well,
Ian, thank you very much. Take your chair. Okay, guys. So, why don't you tell us a little bit, oh man, why did you do all those people?
What's happening?
A lot of free space here, guys, so please, we would rather have you guys closer. So, tell us a little bit about yourself. So, I don't know, Ian, you're the new face in town.
Yeah, so I work for DN Capital. We're a long-standing VC firm out of Menlo Park in London, so $500 million under management, doing seed and Series A. Got a strong track record, 6 unicorns and counting, so not too bad. Hopefully this will be the 7th.
We're going to do 7.
And we invest, or we're probably one of the most active early stage investors across Europe, and we've been increasingly investing in Spain. So we've done now 3 deals, Job and Talent, Housefire, and now Bnext.
Nice. So, what's going to happen with Brexit? Are you going to move here? We can get you the passport if you need one.
The weather's better. So
He can speak fairly good Spanish, so I think he's coming here more often to
Una
practice.
cerveza grande, por favor, right?
Como buen en inglés, ¿no?
Okay, Guillermo, please.
Yeah, so I'm Guillermo Vicandi. I'm CEO and co-founder of Bnext. Like Alex introduced, we're a Spanish-based neobank. We're the leading Spanish neobank. We launched only like 18 months ago, and today we have more than 300,000 users. And like Alex says, we just fundraised our Series A, which has been the largest Series A for a fintech company in Spain, led by DN Capital and a couple of other VCs.
Okay, so first question for you guys, 2 different angles, right? So I'll start with Guillermo, and then you comment on that. Why a neobank? And I'll just give you a little bit of background here. When Guillermo and I met the first time, he sat down in front of me and he said, I'm a lawyer, but I want to do shit in tech. And he's like, what? Do you know how to code? No. Well, but I can learn. I'm like, okay. And that was a long time ago. Yeah. So how do you go from, the legal profession, arbitrage, all the way to establishing the first Spanish neobank?
I don't really know, to be honest. No, it's just that
Do you feel more comfortable now, Ian, that he doesn't know how he got there?
I've heard the story. So.
But look, what we saw here is that, if you think about it, Alex, the banking industry is, I'd say, the last big industry that's still under disruption, right? So we've seen it happen in all the big consumption. We've seen it happen in pharma. We've seen it happen in entertainment, everything. And banking, finances, it's happening now, right? And for us, it was pretty straightforward. I was working at a bank. I was working at a very big Spanish bank, not the red one, but the other one. And we saw internally how regulation was a burden for them and how the tech that they had was a burden for them and that they couldn't move too fast to cope with what was happening in other areas of consumption. And we saw an opportunity. And of course, when we started this, there were already some references of what was happening in the UK with the bigger guys like Revolut and N26 and these guys, and we saw a big opportunity to try and do something a bit more innovative in the banking scene in Madrid.
I met the CEO of N26 the other day. He was around. Did you have a nice chat?
We've got this kind of relationship, we get along, but we don't talk too much, you see?
Okay, fair enough. So Ian, you went from Job and Talent, which is talent acquisition, to Housefire, and now a neobank. How did that happen? What is your compass to select companies? What do you look in their DNA?
Look, even in the different industries, actually to a large degree, it's still applying a similar skill set to evaluate them, right? So we have the benefit from sitting in London to look across Europe. So if I look at them, say, Job and Talent, I looked at pretty much every single model across Europe and actually in the US as well, doing this kind of on-demand staffing agency model, and they were streets ahead. So we have that luxury that perhaps, say, Spanish funds don't have. They have very deep penetration, knowledge of the local ecosystem, but they don't have that benchmarking capability. Then same with House 5. We were the first investors in Purple Bricks, and I've looked at every single model across Europe, and I thought that was the best team, best execution, best model for doing it. I mean, I still think the Spanish market, you guys still have some problems in real estate, but like, the right template to potentially replicate. And I think the same logic we've applied to Bnext. I mean, obviously it's slightly different because there are larger leaders in Europe, but I've seen now a lot of the sort of second wave of neobanks after the first 3 big ones, and we have not seen one with the same exceptional KPIs that we saw in Bnext, and we've had that luxury to be able to benchmark. And so for us, it's, then you have to sit there and think, okay, great KPIs, but where do I think this industry is going? And I think from chatting to quite a few late-stage investors and experts, the general thesis is there are multiple huge banks in each European geography. There are, actually quite a lot of crappy, fragmented, shitty banks in Latin America. Yes, there's 3 or 4 unicorns already, but that isn't the way the space is going to play out over the next 10, 20 years. Regulators wouldn't allow it, market consolidation wouldn't allow it. If you look at the penetration, even if you add up all the consumers that already currently have neobanks in Europe, it's a drop in the ocean versus the total market size. So that's where we go exceptional KPIs, and our thesis on the market is, great opportunity in Latin America, and still relatively early in the penetration curve in Europe, we will back a younger player in this space.
Okay, which actually prompts me to ask you guys, so with the new round, you're sitting on a war chest now, what is that going to buy, right? Apart from, nice dinners, he's probably going to invite me to some champagne at some point, I hope. So what is the plan for the money? Well, what are you going to do in the expansion stage?
What we want to do is, of course, we all agree that maybe the bigger play is trying to successfully launch in Latin America. And that's where we're headed, and that's where we're focused. But it's also true that for us, it's very important to maintain the leading position that we've got here in Spain, right? We grew super fast here with very solid KPIs in terms of how many transactions our users are doing and how much money they're spending with us, and we see that increase month over month. So I think that we all agree here that it will be a mistake to spread too thin between 2 geographies, right? So what we're going to be doing is maintaining the leading position here. We've got a team in place already in Mexico. I think it's 6 people there already, getting it launched. Hopefully we would be getting it ready before the end of the year. So we're focused there. So it's a bit in-between strategy, right? We want to maintain the leading position that we got here, and then see if we are able to successfully launch there and hopefully do it in a fraction of the time that took us here. No?
It kind of reminds me of the Cabify strategy, right? Instead of fighting in Europe where there's already big players, you go to, as Ian pointed out, very fragmented market with people that are not really consolidating the position there. So starting by Mexico, you said, right?
The thing is that you got to understand that I think that for us, it makes more sense than for maybe a UK-based or a Germany-based bank to try and play the Latin American approach, not only because of historical or language, but also because the commercial relationships and the money flowing and remittances back and forth from the region to Spain.
It's already there.
It's very relevant, right? Yeah. And then when you look at the sort of traditional banking industry in Latin America, you would realize how they're probably, not all of them, of course, and they're very good players, they're doing very good things, but sort of the mid to smaller banks, they are like where we were here maybe 12 years ago or 15 years ago, right? So we see the combination of all of that is a good opportunity for us to try and attack that market.
So Ian, you mentioned this before, right? There's been an evolution and you're betting on the future trends that are going to happen. So 2 big questions. First one is, how do you guys see the traditional banking establishment right now? And by comparison, what does your typical user or client looks like for a neobank, right? What are if there are any share points or completely opposite?
Okay. I mean, look, so the first question about normal banks versus neobanks, I mean, the fundamental thesis, I think, why consumers switch to these new generation of banks is 2 things. That first of all, there's a commercial value proposition, because banks traditionally made a lot out of hidden fees and a lot out of lending. Those are the 2 fundamental revenue pools of a bank. What the new generation of banks have done is compress dramatically some of those hidden fees. And FX is the most classic example of that, right? The second part to it is just a better UX. And I find it's weird how it slowly creeps into your customer behavior, right? I've been analyzing myself, and sadly I have some of your competitor cards. I need to get a Bnext one. I don't have a NIA yet, so. But you kind of get a card for like going on holiday, but then suddenly I've started like paying my cleaner every week through Revolut rather than through my HSBC account, because my HSBC account takes about 25 clicks, and I've gone mental before I can send the transaction. And it's 2 clicks in a very clean, usual consumer flow, and you see that with like all the social features you've now launched and the uptake. So and I think there would be a response both from the banks themselves and from actually fintechs who are trying to provide the consumer overlay to legacy banks who just don't have the capabilities and ability to outcompete. But I've launched a few companies in the past, right? And I've got increasingly relaxed with, there's these big incumbents, they've got millions of pounds more than us, they're going to outcompete us, they're going to crush us. Because I've been up against twice huge incumbents, and they've screwed it up. So, I can't say it's going to happen all the time, and I must say, for example, in Spain you have actually very credible banks who are very strong. But my general thesis is, one, it's a huge market. Secondly, 9 times out of 10, I've failed to see an incumbent react against a well-funded, committed, well-positioned startup, and that fear is over-egged, I think, for some of the investing community. So that's my kind of
That's a very good point.
Then for you, I don't know, you probably answer your consumer base better than I can, right? So
but I can see how you're turning into a millennial now.
Yeah.
Like 2 clicks versus 15. Who here has a neobank account? I'm not saying just Bnext, but neobank. Raise your hand. Wow. Wow, so we have the whole neobank community here.
It's only because all this first row is my team.
Yeah, well, I know. No, but there you go. No, but it's interesting. Keep your hand up if you have a neobank account. If you look at the average age is actually, well, that gentleman, I'm calling you young, okay? So just be good about it. But in general, I would say most people are very young. So what is your typical user?
So the thing, for me, I think that retail banking is something that nobody really cares about, right? So it's something that you need to have. You want to have an account, you want to have a card.
It's not what pays the bills for a big bank.
But it doesn't, it's not cool, right? So it's not an app that you would typically recommend to someone, or it's not something that you would wake up every morning saying which one's the best card out there, right? Something that you have, you need to use, right? And this is like the traditional banks have been playing like you're lucky to be a client of this bank, and this is it, right? Yeah. But I think that what we are seeing in our users' behavior recently is that what they want to have is an experience that's closer to what they have when they use Globo or when they use Airbnb, right? So what Ian said is what basically happens for us. Most of the people that use us, like I said, our customers are using us 14 times a month on average. And for the most part is just checking your balance, sending money to someone, or paying with your card, right? So if you're able to get those 3 things right in terms of user experience, then it does make a difference compared to a traditional bank. So what we see our customers do is same thing they do with their traditional bank, but a lot easier and a lot faster, right? So they use it to spend in the same places that they would use their BBVA account, right? But the only thing the only reason why they like us better or some other players better is because it's easier and it looks more familiar to them. It's more similar to what they do with other apps.
So do you keep track of what Instagram is doing and trying to replicate it on the app?
They keep track on what we are doing and then try to replicate it.
Okay, so we're nearly reaching the end now. So I would love to hear your take on, because you're a Madrid-based company. You've been part of the community, most of your team has been part of the community for a long time. So what is your take in Madrid in terms of the good and the bad? And the same for Ian, that you have a foreign perspective. So what good things and bad things do you see about the Madrid hub?
I think that Madrid is a good place to start a business. You'd find a lot of talent. Tech talent in particular is very well prepared. Salaries are not as high as you would find in London, so it is more capital efficient maybe to try and build a business here than to try and build it in maybe Berlin or London or some other hubs. But of course it comes with some complications when it comes to like putting together the business and incorporating, and there's some things on the ESOPs in Spain that are a bit more complicated than what you find in the UK and stuff, right? So I say that for us, it was a no-brainer, right? Everybody that we knew was here in Madrid, right? So why would I go to London and then start something new that I don't know nobody, right? But I think that also, objectively speaking, it's a good place to start a business. There's good talent, there's cheap talent, and there's a lot of people, and there's like an ecosystem that's willing to do things. Of course, it's got some complications, but I think that's probably the case everywhere.
Big fintech culture, because if you go to other countries, like here, everyone is born with a credit card under the, they give you the baby and the bank account, right? But if you go to other countries, it's just unheard of.
Yeah, we're one of the most banked countries in the world.
Yep.
So for us, it was a good starting point as well, only for that, of course.
Ian?
Well, look, I mean, we have the benefit of seeing, I think we did investments in 9 European geographies last year, so we get a lot of investment committee across Europe. We really like Spain, and we'll spend more and more time here. I think, well, first of all, there's a real wave and a dramatic increase in the quality of companies. I think you're seeing a lot of entrepreneurs almost coming out of some of the larger scale businesses like Cabify, et cetera, and now starting their own businesses. I compare often to Italy, two Southern European markets, night and day in terms of the deal flow and traction and growth of the ecosystem here versus there. Second thing I would say is you've got a fantastic duality because you've got very large European market, but also the LATAM play. And so that opens up huge market sizes, and that's what gets especially larger VCs excited, right? Because we have big funds, and we have to generate high returns on those big funds. So we need to have big plays like yours to go after. And having that ability to access both markets is fantastic. And thirdly is very high capital efficiency compared to businesses we see in London, US, and Germany. And you guys are a case in point, right?
Yep.
Best-in-class metrics.
With a fraction of the money.
A fraction of the capital. And also, to be honest, more reasonable valuations. I think the negatives still are, it's a place where people are doing more investments from international funds, but there's still a certain wariness and reticence. So, when we go into a deal, we're thinking a lot about how will this business raise follow-on capital, because the same advantage we may have coming into it, you're going to face going through the next round. And then I think there's a couple of funding gaps. So when I go to, say, London, where I'm based, angel funding there is very easy. We have a very benign tax scheme called the SEIS and EIS scheme, which gives massive tax breaks to fund. And I find a lot of early stage companies here. So I actually think you've got a very good, increasingly good seed network. I'm very impressed with the early stage funds in Spain. They're really doing a great job. But that level before, where you need some rich guys to reach into their pocket, sometimes can be slightly avaricious in terms of what they take on the cap table and the controls they put in place. And it's harder to raise capital for some of these guys, which can lead you down some of these routes where people take too much and it kind of screws up the cap table for later. And then I think the second funding gap is, okay, you've got your good Spanish fund on board, and that's hopefully where I'm trying to play, but you need more, and you need that international exposure, and you need that growth round. So, I mean, your round was a case in point. I think a lot of people thought you were great, but they're like, it just requires too much capital to be funded domestically.
No,
so that's really where we're trying to play.
But it's interesting points, because I was talking with an Irish investor, and I told him the same thing. Like the fact that foreign funds are coming here and co-investing forces the locals to actually go bigger, right? And the fact that your company is going well means that eventually you will become the business angel that Ian was just talking about.
That's the plan.
So guys, we're out of time. Thank you so much for being here, and congratulations. So please, big applause for both of them. Thank you very much, guys. Thank you very much.